Let's get to the macroeconomic picture. India's IIP grew at its fastest pace in 6 months in August, and retail inflation softened marginally last month to stay well below the central bank's medium-term target. So are the fundamentals turning around, or is this just a flash in the pan? How much should we read into those numbers? Ira.
All right, I think it was John Maynard Keynes who said that when the facts change, I change my mind. I think at this stage, we're at the point where we're trying to decide whether facts have actually changed or not. We're looking through the high-frequency data, not just the IIP numbers which came in yesterday, but the host of data that comes in every month. This is the first plate, which is IIP and core sector, because this is the most notable of the data points that came in. So as you can see, I think, the 4.3% is clearly, a jump. It's a jump compared to the last 2 months at least. We don't have the September numbers, but if you look at July, August, and September, which makes up the quarter, perhaps if September holds on, you'll get slightly better industrial output, which will feed into GDP as well. A large part of the surprise, the positive surprise in IIP has come in from core sector, which is encouraging. So core sector numbers at 4.9, which came in from strength in mining and electricity, have been the positive surprise. What is leading to that? That remains to be seen. In terms of electricity, it could be the restocking, sort of reactivity that is taking place in the industrial sector. In mining, there seems to be slightly something fundamental happening on the ground. Even managements that we have spoken to here on BloombergQuint have said that mining activity has picked up. If you look at the breakup of the numbers and just stay with this plate for a minute, I'll just tell you that about 10 of 23 industries saw positive growth. So it's a little early to say that this is broad-based, but it is broadening out. You had capital goods doing well with 5.4% growth in the current month. You had consumer durables up 1.6%. Consumer non-durables, more notably, were up 7%. Also, infrastructure, that segment was up 2.4%. So this time's IIP number is healthy. There is no taking away from that. Earlier in the month, if you look at the next plate, you got data from the usual auto sales, that is the SIAM numbers. And I think in that, again, if you look at a 3-month trajectory, you will see that commercial vehicle sales in particular have been picking up steadily. That is a good sign. Some of it could be individual triggers, like, stopping of overloading, etc., which seems to be leading to demand for additional commercial vehicles. But if there is a demand element to it, then it's certainly positive. Passenger vehicle sales have been strong all along, so let's not spend too much time discussing that. Those are the output-based indicators. If you look at the survey-based indicators for the month, which is the PMI numbers that I'm talking about, there, you didn't get much of a bounce up in the manufacturing PMI. That was flat, but you got a good bounce up in the services PMI, which had been down in contraction territory for 2 months. Important to pick that point up because the Reserve Bank of India, in its commentary, had also said the second half of the year, the upside in growth will come in from services and it will come in from agriculture. So services is certainly playing to script, and that's good news. So on the output side, there is pickup that's coming in, and perhaps that will feed into a better GDP number along with a positive base effect, which will help the second quarter numbers. Then you go on to the other aspects of the economy, and that is CPI. Now remember, we went from 2.3 to 3.36. That was a jump, and it was a bit of a shocker. But then you've got flatlining more or less at 3.28. Again, if you look at the internals of CPI, which I don't have on the screen here, there's nothing that actually stands out in terms of change in trend. So if you look at the core components, all of them are either flat or slightly higher. So core inflation is more or less flat, around 4.5 if you just take out fuel and food. And if you look at the food elements, there isn't much of a change in trajectory. Pulses are still down very sharply year on year. I think it's about 22% decline year on year. That's feeding into the headline number. But on a month-on-month basis, there's only a marginal downtick. Fruits and vegetables are actually slightly up on a month-on-month basis. So I don't think the CPI numbers will do anything to change the view on the economy. But the IIP numbers, if they sustain and if services sustains, will certainly change the view depending on how many months it continues.
So this was a short-lived downturn, one might add, and maybe it was just the sort of the tail end of the demand impact and the big GST disruption.
The first quarter may have been.
Yes.
The first quarter may have been that. 5-quarter decline has been
if, of course, all your green boxes sustain, right?
Yes. And in any case, we've been saying it's a 5-quarter decline. So, the last month was a bit of a shocker because of those one-off factors. But the decline that had been coming for 5 quarters had sort of continued. Now, does it start to rebound from here on? Potentially, just on the base effect. It might. Plus, if some of these indicators start to stabilize, then you may see that 7% plus growth in the second half of the year, which would bring us to about a 6.7 to 7% growth for the full year, which is exactly what has been predicted by the policymakers.